Alright, so this is how to spot buying and selling points within half a fraction. So, so how do you spot the buying and selling points within half a fraction? Um, it's in the tape reading charts. So we'll be going over those tape reading charts, but not right now. Alright, there are some, but how to do it is within the tape reading chart. A lot of examples there, I guess. We went through one of them, but to solidify it, we'll continue. Anyway, but there are some fine points, one of which is you should know what the high and low is for the day, meaning as part of the process. If you're trading a market, one of the things you want to do as a step for preparation is have an anticipation of what the high and low of the day is. And this can be done in a couple of ways that go into it later, but that's one of the steps. Okay. The market is always giving you information about its technical position. It does this through the wave chart. The wave chart will tell you the trend just changed up or down. Okay, which forms your background. The way it does that is because you have day to day to day wave charts for multiple days. Either that, or you can use the wave chart using higher time frame, lower time frame, and forecast the immediate trend. So basically, the immediate trend, if it makes higher high, high low, and then higher high again, that's the immediate trend. But the background comes from the wave chart over a period of days. So in my opinion, like, you cannot keep all that data on your monitor, so it's better to just use if you're using 5 minute, just use an hourly wave chart and look at the immediate trend in the context of that hourly. So there should be two wave charts. It gives further information as to the particular stocks in which you are trading. If you will plot the wave chart on with the wave chart of the market. Over here, he's using the Wyckoff wave, which is basically an index of 5 leading stocks. But you may not want to do that. You may just want to see, okay, I'm going to use the SPY or the ES. So I'll have a wave chart of the ES along with the wave chart of the stock that I'm trading in, along with the wave chart, the higher time frame wave chart, and the tape reading chart. So you're supposed to do that, and as well as have the time and sales. But that may be overkill, and it's not easy to do to have all that. Especially today, time and sales is not is much more difficult. I mean, you get certain information from it, but it's not something you could read and plot data, like in his day. But you can get the speed factor from the time and sales. When the time and sales speeds up versus it slows down, that is one thing that can be ascertained. Thus fortified, there will be no reason to buy on bulges and sell on weak spots, for in this form of trading there are no opportunities to make profits, but to make losses. Well, I don't know what they're saying over here, other than don't buy on bulges and don't buy on breakouts. Don't trade breakouts. You can always trade the pullback. That's the whole point of this. So he's saying that with all that data, you don't need to trade breakouts. You can trade the pullbacks. And in his approach, he actually, like, he will trade the end of the waves. So he will buy high, buy low and sell high. But if you are a bearish conclusion and wait for a bulge, you wait to take your position, the chances favor profit. So again, he's saying short the pullback. The bulge is just another word for the pullback. All such techniques must be taken into consideration. We must endeavor in every way to increase the percentage in our favor. One of the most important ways of doing this is to learn to do your buying on what I call the drive down. Again, this is your pullback, alright? Now how do you buy on the drive down, which is the pullback? So you're buying on the selling wave, and it is just about a minute before the wave ends, while the pressure is on. Not when you see it hesitate, but a minute before that. I mean, in his day that was the case, but now you can wait for the drive down and like the sideways movement. So you can wait until it's on the springboard, but in his day it would take at least a minute to get your order filled, or longer. Okay, so that's why he like anticipated it. Selling on the drive up is just as important. Most of the bulges in a stock are made up by pulls. If you learn to spot these plays, you have all the interest working for you again instead of against you. Take advantage of the public's tendency to buy on bulges and sell on weakness. By doing the reverse of this, it is better to get out too soon than to overstay. The public usually overstays. Watch the wave charts for Q. If you expect to buy, the 5 leaders are showing an uptrend for the time being, but wait for the selling wave, meaning wait for the pullback. Look back and see how long the previous down waves have lasted. So he's saying like he's trying to measure how long this current down wave is going to last. One measure of this is by looking at the prior down wave. So you saw that the last pullback lasted 15 minutes and went down, just for the sake of clarity, 3 points. So 15 minutes, 3 points. From that, you estimate that the current pullback should be around 15 minutes and 3 points also. It gives you, the last pullback gives you data about the current pullback. Alright, so because that's the data you have, you want to use the last pullback. That's what he means. Look back and see how long the previous down wave lasted. Judge by that and the action on the tape about how far this down wave will go. Watch the wave chart of the individual stocks you are trading in and the tape reading chart for volume. Alright, so you want to watch the wave chart of the individual stock for trading, and then the tape reading chart for volume, comparative strength, and weakness. Okay, so what does that mean? Alright, so you can look at the tape reading chart. The focus is on volume, but we're also seeing if the stock is stronger or weaker than the average, meaning market average, and all the other technical points mentioned in the chart interpretation. Look to combine these various indications into a sound conclusion, and when you have made it, time your stroke. That is the moment you give the order. Alright, so timing. Watch for the pauses at the end of the market buying and selling waves. Alright, here's another point. Everybody knows about the turning point, but there's something called the halting point as well. So he's going to start going into that. This is not easy to do. You really need to look at the time and sales. Alright, you need to have time and sales, in my opinion, to do this, because this is really a function of speed, not really just volume. So it's volume as well as speed of orders. So something like this really cannot be done with just a chart, unless your chart is tracking the speed at the end of a wave. Watch for the pauses at the end of a buying and selling wave. They indicate that the forces produce the wave have exhausted themselves. So you look for the climax here. For a moment or two, even in a fairly attractive market, the ticker is quiet. After the climax, you look for the ticker to be quiet. These are like periods at the end of paragraphs. New phases of the tape story usually unfold. So again, there's certain waves that are not low volume, they're kind of like climactic. So you want to see the climax, and then for a moment or two you'll see that after the climax or the end of the climax, that bar at the end of it, the time in sales is going to be very quiet. This is known as the halting point. It's not a turning point. It is a halting point. It is a point where there's going to be change. Now, does that mean that change is going to be a turning point? It is a type of turning point, but not exactly. And there are more halting points than there are turning points. This requires a lot of expertise, by the way. So you really need to be looking at the tape, the ticker, to figure it out. When a stock hesitates, this is another point here. Hesitation. So what is hesitation? In my opinion, it's like when you have green bar, red bar, green bar, red bar. Or the market goes up, it hesitates, come right back down. So it's like the opposite of follow through. That's the best way I can describe it. So when a stock hesitates, it notifies that it's lost its momentum. It's very important for you to understand what this means, losing momentum. He mentions momentum 2 times in this, so I'll go over the first and the second. The hesitation, which is the lack of follow through, is evidence of a loss of momentum. Okay? In the direction which it has been traveling. So you have green, 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 then red, then green, then red. Uh-oh. So you had green, 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 then red, then green, then red. Uh-oh. What's going on? It's hesitating to go higher. It goes up one green, follows by red. Goes up another green, follows by red. That is the lack of follow through. If it had momentum, it would continue green, 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 red, green, 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 green. But since it's going green, red at the top of a wave, it's losing its momentum. And you'll see the thrust shortening and all that. Anyway, you should then quickly make up your mind whether it is advantageous to trade. Any halt in the final... Alright. So it's lost in momentum. Okay, you should then make up your mind. Any halt may be the final turning point in that move. If you have studied the first division of this course and know how to judge the distance which a stock should move, you are well fortified. You can easily distinguish the halting places from the probable turning points. There are more halting places than turning points. Well, you talk about first division, you know, using that point figure and look for a halting point there. The periods of hesitation usually indicate a reversal of temporary trend. They are also marks the beginning of a new trading area. This is very important right here. How are trading ranges, how you identify trading ranges? It's like you're looking for hesitation, meaning green, red, then that sets up that kind of sets things up. So a period of hesitation usually indicated a reversal in the temporary trend. They also mark the beginning of a new trading area. Every move starts at the end of a previous move. Okay? If there are indications that the coming move will be important, take advantage of it. If there is no such indication, let it pass. Always expect a change. Be constantly on your guard and ready to close your trade at first sign of danger. Even when you have moved your stop close to the market price for your stock, try to do better by selling on a strong point or buying on weakness if you desire to close your trades. When an upward or downward move is losing some of its force, it will be indicated by a shortening of the thrust. When an up or down move is losing some of its force, it will be a shortening of the thrust. But this is also the case of momentum. Okay? Never reach for a stock except blah 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 blah. Alright, we're not going to get into pyramiding, but loss of momentum is evidenced by two things. One is hesitation, green, red, that type of sequence at the top of a wave, at the bottom of the wave. It is also a shortening of the thrust. So he's saying it's losing its force, but it's same as really losing its momentum. So that's an important point. So let me just go over these points real quick. The first is buying and selling. How this is going to be done, we'll be examining the tape reading chart. All right. The immediate trend and the background, you got to use the wave chart. Use the higher time frame, 60-minute, and then lower time frame, 5-minute, for example. And that's in conjunction. Always use the daily. But as far as wave chart is concerned, you can't have wave charts of like so many or multiple days on your monitor. So you just use an hourly and a 5-minute. What charts do you need? There are a couple of charts. You need the wave chart of the market. You need the wave chart of your stock. You need the tape reading chart of your stock. And you're supposed to have the ticker tape, which is basically your time in sales. Alright, now that's a little bit, that's what you're supposed to have. And you should also know from the daily whether your market is traveling or whether it's in a range. Is it range bound, or is it in the middle of a swing? Is it part of a swing up or swing down? And he says if you are well equipped, you can basically trade the pullback instead of the breakouts. Then he says, how do you measure how far a wave is going to go or how far it's going to pull back? Just compare the current rally with the prior rally and the current pullback with the prior pullback. Now, most of the time, it is a good indication, but it's obviously, markets, when they attract a following, they continue. So you just have to be aware of that. But the only data you have, or the closest data you have, is the prior rally and prior pullback. And this is in terms of both price and time. Okay, look back and see how long the down wave lasted. Now, when you're looking at the tape reading chart, your focus will be on volume and comparative strength, or predominantly volume. Okay, so the other thing is regarding halting points and all that. Take a look at the climax and see what happens at the end of a climax. It will tell you a lot. The tape will slow down. The other thing here is when is stock hesitation. Hesitation is indication for loss of momentum. And that's about it. So that covers this chapter. This chapter again is titled How to Buy and Sell Within a Fraction of a Point, and it requires an understanding of hesitation, because hesitation gives you momentum, information about momentum. It also talked about the wave chart having the background and the current immediate trend. Talked about hesitation points at the end of a climax. It also talked about the volumes in the tape reading chart. That is what we're going to be using. And I think that's about it. Take care.